What's happening, people? Good morning, New York, and welcome everyone to our live stream. We are broadcasting live on Facebook, YouTube, and Twitch TV in an effort of bringing the financial markets to your doorstep and help each and every one of you make informed decisions about investments and the amazing CFDs markets. The episode today is proudly sponsored by Forexy and Markets.com. If you like what you see, guys, please feel free to like, share, and subscribe and support us in delivering more great content. Feel free to type your questions and interact with me during these live broadcasts, and I will do my best to answer every single one of them. We are minutes away from the US opening, guys, which starting today has moved 1 hour back to 3:30 Europe time, as Europe turned the clocks backwards last night, guys, 1 hour. Here's what's going on in the markets today. Here's what you need to know in the markets today. We started the European trading session in red today following announcements that COVID-19 cases in Europe hit new record highs, sending more and more European countries into lockdown. France posted over 52,000 new cases over the weekend. Italy imposed businesses to shut down operations at 6 o'clock, and Spain also declared a state of emergency that could be in place for up to 6 months. More details about the new restrictions in the European Union to come in the next few hours. Let's move on to the US front, guys. On the US front, the US registered over 60,000 new cases of COVID-19 yesterday, a drop from a daily record set last week, but still up from a week earlier with 42,000 hospitalized, up 50% from last month, and the 7-day average for deaths reached 885 cases, which is up 10% from last week. Obviously, financial markets felt that, and even more confusion was created among investors, sending oil prices today below $40 per barrel. Oil price also dropped below the psychological level of $1,900 per ounce. And also the European indices, DAX 30 and CAC 40, have struggled to move higher today, trading in red most of the day. The absolute champion was the Bitcoin, guys, which... There you go, which despite the meltdown of the global markets managed to keep up the gains, trading above $13,000 at 13,166, apparently acting more like a safe haven than a decentralized crypto asset. Big week for the US stock markets, as the big boys will announce their quarterly numbers. Some of the big names announcing tomorrow are Microsoft, Pfizer, AMD, Caterpillar, and HSBC. On Wednesday, guys, we're going to have the giants Visa, MasterCard, UPS, and Boeing announcing their quarterly figures. And on Thursday, we have Apple, Amazon, Alphabet, which is ex-Google, and Facebook coming out to play. There is the calendar for Thursday, guys. Okay, with all these big names announced, even Samsung will announce their quarterly numbers on Thursday. Right, moving on. Today, the U.S. stock markets indicate to a lower opening again, with investors spooked by the surge in COVID-19 cases, as well as the delay of the stimulus measures widely expected by the U.S. stock markets. Some good news, though, might arise in the few hours, as Nancy Pelosi stated yesterday that the Trump administration was reviewing the latest proposal for COVID-19 relief bill over the weekend, and that she expects an answer later on today. We all expect an answer later on today, guys. And in the next few minutes, after we have a quick look at the charts, we're going to have Neil Wilson, Chief Market Analyst at Markets.com, live from London and live for the first time at the US markets opening with InstructFX. So stay tuned and don't miss out. Yeah, we're going to have Neil Wilson live with us in a few minutes. Before that, let's have a quick look at the charts, guys, and see what happened with the markets today since the European opening. We're going to start with crude oil, which has traded lower today the entire European trading session, and currently trading at 39.02. Okay, we see a green candlestick. We see the RSI and the stochastic pointing higher just ahead of the US markets opening. But Can oil price really stabilize above the $42, $43 per ounce? Only time will tell. When there's an oversupply of oil on the market, when we see little to no demand, on crude oil prices. Let's see. Maybe the harsh winter in North America and Canada will help oil prices as well as natural gas to push a bit higher and create a bit of demand. On the almost saturated oil markets. We're moving on to the euro, guys, which gave back the gains it had last week during the European trading session today. As you see, it traded lower today, currently trading at 118.16. Lower than it traded this morning. We're looking at the pound, which again dropped sharply during the European trading session, currently trading at 130.15. We see a news that the chief EU negotiator Michael Barnier is due in London today for talks with Britain to find out whether a deal on future relations can be struck to avoid widespread trade disruption at the end of the year. The UK left the European Union in January, guys, but the two sides are still trying to clinch a deal that would govern nearly $1 trillion in annual trade before transition period of informal membership ends on December 31st. Right. Okay. So European diplomats were not expected to be briefed on progress in the latest batch of talks until later in the week. Barnier and his EU team will be in London until Wednesday, after which talks will switch to Brussels and continue through the weekend. An EU spokesperson stated earlier on. Right, back to the charts, guys. We're looking at the USD JPY and the tiny rally that the US dollar had versus the Japanese yen today during the European trading session. We're looking at the Aussie dollar, which did exactly the opposite of the USD JPY today, which gave back the little gains it had overnight on the Asian trading session. We're looking at the USD Canadian, which moved slightly higher today, currently trading at 131.79. But as we get closer to the US markets opening, we see the US dollar turning around, and we see the RSI and the stochastic at the bottom of the chart again in the overbought sections and turning around, apparently pointing downwards to a bit of a correction. Okay, we're going to go back to the S&P 500 and the Dow Jones in a few minutes after the American opening, guys. We see that they both closed Friday in red. Let's see what the market opening will be today. We expect, at least from investing.com's point of view, we expect a weaker market opening with the Dow Jones and the S&P 500 dropping almost 300 points. I saw earlier on Bloomberg. The US dollar index, which moved slightly higher today, is currently trading at 93.01, very close to the 93 flat. We see the RSI and the stochastic pointing downwards. We see a red candlestick. The last hour candlestick is red. Let's see how the markets will open today, guys. We're looking at gold, which is currently trading at 1903. Very little change from this morning when it was trading at 1907, 1908, if I remember correctly. So the markets didn't really move today, guys. Apart from Bitcoin, but not even Bitcoin. Bitcoin pushed just a tad higher from this morning, currently trading at 13,184. It still didn't manage to break the 13,200 or to reach the 13,200 level. Now, as I promised you guys, I went over this with João Monteiro this morning at the European markets opening, as Forex is an offshore regulated brokerage. And now we're going to go live with Neil Wilson, Chief Market Analyst at Markets.com, to see what Markets.com thinks about ASICs officially adopting curbs on selling CFDs to retail investors. The Australian regulator announced on Friday that regulated firms are now forced to limit the leverage they offer to a maximum 30-1, down to as little as, bringing them lining them up basically with Europe, with UK, yeah, with ESMA. So without further ado, guys, let's see what Neil Wilson, Chief Market Analyst at Markets.com, has to say about it. We're going to come back in exactly 30 seconds with Neil Wilson live from London. And we are back. Good afternoon, Neil. How is London? Good afternoon, Neil. Happy Monday.
Hey, good afternoon. Yeah, it's very well here. We're still working from home, so I'm just outside of London at the moment. But yeah, we're it's all looking quite nice today.
Is it still raining in London, Neil? It was raining when I first got to UK many years ago. It rained the day I left UK. Is it still raining now?
It's sunny at the moment, but it's been raining earlier. So it's that time of year when it can it's very unpredictable weather over here.
Right. Okay, Neil, one of the reasons why I have you with us today is to talk about Australia's latest decision of changing the leverage, of downgrading the leverage to 30-1, which I'm sure you're used to, as the entire Europe has changed the leverage in the last couple of years. What do you think about this change? Did it take you by surprise?
No, not at all. I mean, it's pretty much in line with what had been put forward, I think, in the first consultation in August 2019. It's very much in line with that. It's also, as you say, very much in line with the current European regulations, and internally we've been discussing for some months, really since last summer, the prospect that the Australian regulations were inevitably heading in this direction. So it's no surprise to us at all. We are very ready for it.
Right. And what does this mean for the retail trader, Neil? For the average trader that can only trade a $500 or $1,000 account, how big is the hit for them?
Yeah, I mean, it definitely reduces their ability to control larger positions. That's a given. That's the very nature of the regulations. It requires a more conservative approach to trading, which in many ways may not be a bad thing. I think it can help protect client balances for longer. So we're on board with these sort of regulations, because anything that helps the client is in our interests. But clearly, it does mean that you don't have access to that kind of 400-1 type leverage that some clients may have been used to in the past.
So is the 400-1 leverage available for professional traders? If they manage to qualify as a professional trader, will they still get the 400-1 from markets.com?
Yeah, so we have an elected professional account, much like I think many other brokers do in Europe. I think it's 300-1 for that one, actually. But and we still have that elected professional setting, as well as we're globally regulated. So we have regulations. We're in the UK with the FCA, obviously with CISEC for Europe and ESMA. We also have an Australian regulated entity, a South African regulated entity, and a BVI regulated entity as well.
Wow, so you're all over the world. So for the retail trader, yeah, for the average person, isn't Australia afraid that retail traders will migrate towards offshore regulated companies just to get access to that 1-400 leverage that they're so used to?
Yeah, I mean, I think that was definitely an argument back when I remember when the ESMA regulations came out, that you're potentially pushing people to unregulated entities, and I think that would be an argument that you could make again now. But I don't think I think our experience in Europe has not been that people have drastically fed out of the system towards unregulated brokers. I think most clients are quite sophisticated and aware that that there's certain advantages with obviously being with a regulated broker, and I think that's very important to them. And within that, there are, as you say, with the elected professional account, say with other regulated entities, it's possible to be a bit more flexible on leverage than the regulations that are coming might imply.
I understand. So it didn't take you by surprise. You guys were ready. You have many regulations to welcome any trader, okay, from any part of the world. You weren't surprised by these changes. In fact, some of you were waiting for these changes to happen. My question is, and maybe you can help me with a hint or something, why now? Why with all this COVID pandemic? Why just before the US elections? Why now? Why did Australia decided on Friday to announce the new change in leverage? Couldn't they wait till December, let's say?
Yeah, I think the time. I think some of these regulatory changes don't. They happen in a degree of a vacuum in that they're looking at it from a different. They're looking at things from a different angle than some of us might if we're in the industry or in a business. They're seeing it from another viewpoint, and I think they've seen it from the viewpoint of sort of reducing and minimizing that regulatory arbitrage between Europe and Australia that's existed since the ESMA regulations came out. So I think they're really keen to and have been really keen to narrow that gap and bring the two bring the two systems basically in line with each other. So I think they're not particularly looking at what's going on in the market or anything like that. And I think obviously bear in mind, I think the changes don't take effect until March 2021.
Until March 2021. So the traders have plenty of time to absorb the information, get their positions ready, and probably reorganize their portfolios. Yeah, in line with the new leverage that is only 1 to 30 on majors. We saw that they downgraded cryptocurrencies to 1 to 2 from 1 to 5. Yeah, and on stocks we were looking at 1 to 10, if I'm not mistaken.
Yeah, I mean it's obviously pretty drastic, and if you look at it from what's gone on before. But as I say, I think with a sort of the European mindset, we're in the sense that we operate predominantly in Europe, where our sort of domestic regulators, European, if you like, and so we're very used to this. It's not really a significant problem for us or our clients, I don't think, to get to grips with. I think our experience with the European changes that happened is that on the whole very positive, and clients are on board with some of the added protections that they also get alongside the reduction in leverage. They actually get better protection of their client balances and so on. So I think on the whole, our experience suggests that it's going to be a positive change.
A positive change, but we know human beings usually don't react well to changes until they get used to it. Let's hope everything will be okay. Today we saw a European delegation in London. They will be in talks by Wednesday, with the UK government in hopes for a Brexit deal, versus a completely no deal. Did the markets feel this from your point of view already today? Because today we had a fairly quiet market opening. The European currencies traded slightly lower today.
Yeah, it's not been the most exciting, but I think we obviously had a bit of a pullback. We haven't seen that much activity really in the FX, and certainly cable is bouncing around the ranges still, and we're not seeing any clear direction from the Brexit talks. Obviously, I guess the most interesting thing about today really was that big move on the DAX at the open as the SAP results came out. That's been the sort of biggest move that we've seen today, and it's certainly been an interesting one for a lot of the clients that are trading the DAX at the moment.
Let's see what's going to happen after the US opening. We are officially into the US opening for about 5 minutes now. We're going to have a look at the charts in the next few minutes and see how the markets open today. Big day in the economic calendar for US stocks. We're going to have some big names announcing this week. We have Boeing, we have Visa, we have MasterCard. My question to you, Neil, can the US stock market cope even if they have good results? Let's say the big boys that come out to play this week, they're going to have good results. Can they cope with the complete lack of stimulus that is awaited for weeks now before the elections?
Yeah, I think that's a good point. I think I mean, expectations are not exceptionally high, I guess, for earnings, but certainly, the potential surprises that you might see are probably more likely misses, and the backdrop, of course, is lack of stimulus and the election, and therefore there doesn't seem that much of an upside catalyst at the moment for the market. I think obviously, you do have Apple, Facebook, Amazon, Alphabet, Microsoft all reporting this week. I think 4 of them are all on Thursday, so it's going to be a massive day, that one. That obviously, just because of the market cap of the companies that we're talking about, that will have an impact on the market. But I think on the whole, I think you're within the ranges probably, with maybe just maybe a bit more downside bias just as you approach that 50-day moving average on the S&P, and with that election uncertainty coupled with the lack of progress on stimulus, I think you just drift a bit until the election's out of the way, and then you can get some real sort of momentum, and that momentum might come upside or downside, because I think the market hasn't fully understood really the implications of the Biden tax reforms in Q4 versus the expected stimulus that you might get. So there's a real trade-off between higher taxes, which should be bad for equities, and then massive stimulus, which would be good for equities. And I don't know if the market's quite sure which way it wants to break on that front.
Definitely, I'm with you 100%. We saw Bitcoin, the absolute champion, trading higher, breaking the $13,000 level. It's currently trading just short of the 13,200. Is Bitcoin starting to act more like a safe haven asset when the entire world basically is tumbling down? We saw this reaction from Bitcoin several times.
Sorry. Yeah, I mean, it's very interesting, because it was actually, Bitcoin was sort of quite closely correlated with the S&P for a number of months after the sell-off at the start of the year. But we are seeing a bit more safe haven bid for it. And I think the news last week from PayPal that it's going to allow buying, selling, and holding of Bitcoin and a number of other cryptos, that's been...
Yeah, I saw the news the other day. That was amazing.
Yeah, it's a significant step up, and I think it sort of helps to mainstream the crypto space a bit. And I think there was a note out over the weekend from JP Morgan's just pointing out that for among younger investors, millennials and so on, that they are buying, they're not buying gold and silver or bonds as a safe haven. They're buying
on
Bitcoin as that safe haven, and so that's really making a difference for the market. And that report was suggesting it could be 10 times the value that it is now, and that's obviously a report from one of the big Wall Street banks. So I think that if the institutional banks get on board, then it does become a very different picture.
Right, I'm with you. Ladies and gentlemen, we had Neil Wilson, Chief Market Analyst at Markets.com, live from London. Neil, thank you ever so much for being with us today. We're going to speak soon for another market opening. Take care.
Thank you. Thanks a lot.
Right, guys, that was Neil Wilson, Chief Market Analyst at Markets.com. Let's move on and see what are the top 5 things to know in the markets today. We see number 1 on the board, the virus spreads further, stimulus talks still deadlocked. The US registered over 60,000 new cases of COVID-19 on Sunday, a drop from the daily records set last week, but still up from a week earlier. While the high number is partly explained by expanded testing, hospitalization at just under 42,000 are up by some 50% from a month ago, while the 7-day daily average for deaths at 885 is also up by over 10% from a week ago. Right. Over the weekend, the White House confirmed that a number of aides to Vice President Mike Pence had tested positive for the virus, casting further doubt over the administration's ability to keep the virus under control. Pence, who denied the reality even of a second wave of the pandemic in the summer, has indicated he won't suspend his campaigning activities with only 8 days to go before the election. The chance of the package of economic stimulus measures, meanwhile, receded still further at the weekend, with both sides blaming each other yet again for the lack of progress. So we're not going to see the stimulus package released very likely until after the U.S. elections, unless, who knows, maybe the U.S. President Donald Trump will take everyone by surprise just a day or 2 days ahead of the elections and release the new stimulus package that is awaited by everyone. Number 2 on the board, Europe takes fright as cases hit record. We spoke about it earlier on, guys. Europe lurched further toward a full lockdown as France, with just 20% of the U.S. population, posted over 52,000 new cases yesterday, or nearly 90% of the U.S. Number. Italy enforced 6 p.m. nationwide closing time on bars and restaurants, while Spain's government declared a fresh nationwide state of emergency, which can stay in force for up to 6 months. Last week, guys, we saw Ireland imposing lockdown for a period of 6 weeks. Okay, so slowly, more and more countries in Europe are talking about lockdown measures, okay, as people are widely affected by this COVID-19 pandemic. Right, now, number 3 on the board, guys, stocks set to open lower today. Okay, U.S. stocks are set to open lower. We're going to have a look at the charts in a minute. Number 4 on the board, and very, very important, China sanctions U.S. defense companies Ant Group prices Hong Kong leg of IPO. China slapped sanctions on Boeing and Lockheed Martin in response to a recent U.S. deal to sell state-of-the-art weaponry to Taiwan. The measure came as China's Communist Party begins a 4-day meeting to map out its priorities for the next 5 years. The event is closed to the press, so its conclusions may not be known until later in the week. Okay, but nothing good on the horizon. Last week, guys, we saw U.S. starting some sort of poking China, basically, and some Chinese publications, that were named that they provide information for Chinese papers. Now, China promised they're going to retaliate, as America keeps poking them. Month after month, there's a new thing going on between America and China. And there you go. The first sanctions on Boeing and Lockheed Martin are coming from China just ahead of the U.S. elections. Number 5 on the board, we have new home sales, guys, which will be announced in about an hour and 15 minutes. Okay, the U.S. report new home sales data for September. Sales are expected to hit 1.025 million, the highest level since the heady days of subprime credit boom in 2006. Okay, that would reflect a slowdown in month-to-month growth to 2.8% from over 4% in August. There will also be surveys from the Chicago Federal Reserve later on and the Dallas Federal Reserve as the focus sharpens on the Federal Reserve's policymaking committee meeting next week. Okay, as I mentioned a minute ago, we are heading towards the end of the earnings season, guys, and we have a lot of big names announcing this week. So stock traders, be aware. Currency traders, be aware and see what is happening. Now, let's move on to the charts and see how the U.S. markets open today, Monday, 26th of October, 2020. We're looking at crude oil futures pushing lower after the U.S. opening, currently trading at 38.74. Okay, and by the looks of it, let me increase the time frame to a 4-hour chart. Okay, if this will continue, guys, probably you're going to see oil price trading lower, aiming for the 37 mark. Okay, if this continues, we are moving on to the euro, guys, which again is trading mixed. It traded mixed ahead of the U.S. opening and is trading mixed after the U.S. opening. Okay, we see the RSI and the stochastic turning around from the oversold levels and pointing upwards, but again, it's very, very early to say. We see the pound trading lower. We see the RSI pointing downwards and the stochastic turning around from the overbought levels, which usually indicates more selling power. If the pound will continue to drop, then traders will probably eye the 110.29.50 mark. okay, for a short position. And if the pound decides to turn around, probably traders will aim for the 113.90 level. Yeah, riding it only 70, 80 pips from the current market price, as we have this European delegation in UK. Yeah, that will be there till Wednesday. Okay, and they will be in talks regarding the UK leaving the European bloc. USD JPY shortly after the US opening. Again, nothing really happened. We see a red candlestick opening, but nothing, no other direction. Maybe if I decrease the time frame, we get more indication. Right. By the looks of it, judging by the last candlestick, the US dollar might want to settle above this resistance level, at 104.95. Okay, and it's currently trading slightly higher at 104.97. Okay, so don't be surprised if we're going to see the US dollar pushing higher today, guys. Okay, towards a 100% correction from the latest drop that we see in the left-hand side. Here we see the markets going sideways for a bit of time, and then slowly we see the US dollar trying to correct. This might be a false breakout, guys, or it might be the real deal. Only time will tell. Let's move on to the USD Canadian, which again is pointing towards the downside after the US market opening. We saw the correction. Okay, we saw the correction of 100%. The question is where to from here. Okay, we might see the US dollar dropping a bit today versus the Canadian dollar. Let's see how the S&P 500 and the Dow Jones open today. Wow, very bad opening for the S&P 500 and the Dow Jones. You can see it down there, guys. Very big gap. Okay, we have the S&P 500 currently trading at $3,428.67, and we have the Dow Jones Industrial Average currently trading at 27,911.92. Okay, after it opened sharply lower, over 300 points lower than the closing on it had on Friday. Okay, where to from here? The stimulus measures are a million miles away by the sounds of it. Okay, so when are we going to see the stock market's recovery that we're all waiting for? Only time will tell. We see a positive opening today on Apple, on Amazon, and on Nvidia. Okay, they tend to push slightly higher. The absolute champion among these three is Amazon, guys, currently trading at 32.44 flat, and by the looks of it, pushing higher. Probably traders will keep an eye on the 33.78 level. Okay, waiting for positive announcements from Amazon. We're moving on to the US dollar index, guys, which, again, as things stand right now, is trading flat. Yeah, it doesn't want to go up. It doesn't want to go down. We still need a few more hours to pass on the US trading session to see a clear direction for the US dollar index. Hey, and this can only mean one thing. Gold price is absolutely pinned, guys, just above the 1900 mark. Currently trading at 1904, 1905 flat. Okay, it tends to want to push a bit higher, guys, but again, nothing is happening. The US dollar is weighing heavily on gold prices. Let's say that Nancy Pelosi will give us a good news today. Let's say that over the weekend, the Trump administration did indeed decide to push the stimulus or the COVID-19 aid bill to push it forward, and then we might have a bit of movement on the markets. But the markets were really shy today during the European trading session. And as you see right now, they are still shy on the US trading session. Okay, we're looking at Brent oil futures, which again are trading at 41 flat. Okay, and by the looks of it, there's no potential for the upside. Yeah, if anything, probably they're gonna go even lower. Yeah, targeting the 40-20 level. Okay. As they settled below the support level at 41.53, which we saw on the charts. Okay, now the absolute champion, guys, Bitcoin, which is currently trading at 13,185. Very positive view on the Bitcoin from what we see right now. Bitcoin is aiming towards the 13,200 level. Let's see what's going to happen today. Very, very good rally for the Bitcoin. And as you look at it on a long time frame, on a bigger time frame, there you go. This is the impressive push that Bitcoin had in the last week or so. Looking towards the left-hand side, guys, we see that Bitcoin reached the most recent all-time high, which was at $13,690. We're somewhere around that region. Okay, a lot of positive outlook for the Bitcoin. So after this high, the other all-time most recent high will be the 17,155 mark. 17,155. There is great potential to see Bitcoin pushing all the way up to 17,000, guys. But we need a really big deal, a really big news on the markets to give investors around the world such tremendous buying power, and buying confidence to push Bitcoin prices all the way to 17,000. But as João Monteiro was saying last week, guys, we might see Bitcoin reaching the all-time high, which was the 20,000 mark in the first or second quarter of 2021. Let's have a quick look at some trading signals, guys. Bear with me for just a second. Let me set the trading signals from investing.com and see what they think about the markets today, as nothing really gave anyone a clear indication on where the markets might go today. Okay, and by the looks of it, we're not going to get that clear indication just yet. We're seeing the euro in a strong buy position, very short time frame versus the US dollar. We see the pound on a strong sell position, short term versus the US dollar. The USD JPY on a 5-minute chart is neutral with strong buy positions on a 15 minutes and hourly, but with strong sell on a daily chart. Okay, USD CHF mixed signals, strong sell on a 5-minute chart, strong buy on hourly, and the daily still remains a strong sell. Very, very mixed signals. As we're getting towards the bottom of the chart, we're getting a bit of more clarity. We see the euro set to strengthen versus the pound. That might be an interesting currency pair to have a look at. Sorry, we see the USD Canadian on a buy position and strong buy hourly and on a 15-minute chart. Okay, we see the Kiwi dollar set on a strong buy on all 4 time frames, guys. So have a look at the Kiwi dollar. Maybe that makes a bit more sense. Okay, and at the very bottom of the chart, we see the pound weakening versus the JPY and the CHF, with strong sell positions on 2 or 3 out of 4 time frames. Okay, let's have a quick look at commodities, guys, and see what the overview is today after the US opening. Gold is set in a strong buy on 3 time frames, 5 minutes, 15 minutes, and hourly. Silver is set in a strong buy on a 5 minutes and a 15-minute chart, which means the US dollar might lose a bit of strength. If gold is going up, then very likely the US dollar will drop a bit. We're looking at crude oil, WTI, and Brent oil, guys, both stuck in a strong sell on all 4 time frames, and natural gas is still maintaining the strong buy it had at the European markets opening this morning. Okay, so the direction seems to be clearer for commodities, for crude oil, Brent oil, and natural gas. US wheat set on a strong sell on 3 of the time frames, and the daily one still remains a strong buy. Probably US wheat is just doing a bit of a pullback after the good rally it had last week. Okay, and now let's have a quick look at indices, guys. Let's see the Wall Street indices. Sorry, not the European indices. Here we're looking at the NASDAQ 100 strong buy, 5 minutes, 15 minutes, and hourly. We're looking at the S&P 500 and the Dow Jones in red, complete red on all 4 time frames. All right. We're looking at small cap 2000 again, strong sell. DJ Transportation, strong sell. DJ Utility, strong sell. And NYSE Composite is in a strong buy on all 4 time frames. So if your brokerage, if your indices traders, guys, and your brokerage provides you this contract, have a look at the NYSE Composite, as it has 4 strong buys on it. Okay, and also have a look at the S&P 500 and the Dow Jones, which by the looks of things they are set to go sharply lower today. This was it from my side today, guys. Great pleasure of having Neil Wilson for the first time live with InstructFX. A great pleasure of having Joe Monteiro live this morning. Okay, at the European opening. Don't go anywhere. We're coming back live in 3 minutes with dumb money and more trading traps revealed by Giovanni, the passive trader, guys. Stay tuned. We're coming back live in 3 minutes with Giovanni, the passive trader. And until tomorrow morning, guys, when I do the markets opening, remember to trade responsibly and may all your trades be in the money.